everyone, and welcome back to the Pulse here with the PeakBot team and Mark Phillips from Harvested Financial. Gentlemen, how we doing today? Happy Monday.
Doing good.
Happy Monday. Happy dead week between Christmas and New Year's.
Yeah, dead week for sure. However, it's been an interesting last couple weeks in the market, at least for myself and Ben and a couple other PeakBot traders we've spoken to. So I'm sure we'll talk about that. But we have a lot to go through here today. Of course, as always, we're going to quickly run through the PeakBot picks and see who won from last week. It was coming down to the wire when we looked on Friday. There's a couple that are right on the line. So we'll see how those are going. We are going to be doing stocks in real life, of course, and we're talking about DoorDash today. All right, so hang tight. Got a lot of great information and analysis on DoorDash coming. We'll take a look at economic events, do a little SPY analysis moving into this week, talk about what days we have off. Just New Year's Day, correct? Just New Year's Day.
Just New Year's Day this week, yep.
So got a lot to cover, so let's get into it. Guys, what do we think? Let's get PeakBot picks out of the way. You got your chart up?
Let's hit it.
All right, let's hit it. So let's start with Thomas. I think he was in the clear. So he
was definitely 3 for 3, right?
Yeah, we're just going to fly through it. I'm not even mentioning premium. Let's just make sure CVX is above 140.
CVX above 140. It is.
It is. Chevron. He was bullish on it. He was bearish on PG under 172.5.
Good.
Done. And JPM bullish above 235.
There he is. Man, Thomas is on fire. What's his win rate at?
So as of last week, it was just shy of 90%, or maybe right at 90%. This will put him back above 90 for sure. So yeah, kid has this contest figured out, and Ben and I talk about it every week. We're like, when are we just going to start trading these PeakBot picks? And we do take, a couple of them every week, it seems. But all right.
Now, how would you trade these if you were to trade these? Would you put these? How would you do that if you were?
Most of these trend spread, and that's the watch list we're picking off of here. Due to the fact that with trend spread, we're really looking for clear trends here. Also, it's got take profits built in, and it's rolling contracts. So as far as an efficiency standpoint, compared to a lot of these are good stocks to wheel too, not financial advice in my opinion. They're just expensive. That's why I go trend spread. Yeah.
Yep.
So what did we have here? Okay, so Ben, everybody was 2 bulls and a bear last week. So Ben had MSTR over 130 or 330 over 330 for like a whopping $560 in premium. So Ben, MSTR over 330. Oh,
wow.
No. Did we talk about this? What happens?
Right at, well, I'm still out of the money.
You're out of the money.
I'm at the money.
Yeah, that would not be automatically assigned.
Okay. All right. Wow. Okay.
Down to the penny.
Okay. All right. 1 for 1. Tesla bullish above 425.
Looking good.
And then AMAT bearish below 170. Oh man, I got my work cut out for me. In fact,
that does
it. We don't even need to look at mine if we don't want. Well, we'll look at for win rate, but you take it because you had the premium.
I had the most premium. Now the reason why trading these tickers, like we said, Dillon, like just taking these and trading them.
Yeah.
I'm throwing out some wild names here, like MSTR. I don't know if I would go out and actually automate that. The spread on it is huge. You are earning a lot of premium, but I mainly do it for the sake of competition.
Yeah. Everybody has their approach now with this contest. Yours is working right now. Thomas is working. I'm starting to figure it out. We're almost always going 8 for 9 or 9 for 9. It feels like every single week, which is, I think more people need to start talking about that. But that's okay. And we're making these picks in 5 minutes. All right. Let's just round me out here. See if I can stick with the 3 for 3 club. Netflix over 900. NFLX. Nice. TJX. Bullish over 121. All right.
Looking good.
Bearish on XOM. This was the one that was close, under 108. All right. 9 for 9 for the boys.
Yeah. Looking
and
good.
You win the week by the skin of your teeth. Just making
by a penny.
So great week in PeakBot picks. We'll have that posted. We'll have our picks that we selected on Friday out there. So great job. Love going 9 for 9. All right, guys. What do we say about stocks in real life?
Yeah, let's do it. And just a quick technical thing, Dillon, I reposted our stream on Twitter. It did the whole link thing. So for our buddies that like to go out and repost, the link should be good now.
Oh, okay, good. Because it wasn't showing the video. And when it doesn't show the video, we know how that works. Anyway.
Yeah.
All right.
Anyway, stocks in real life. Let's do it. Let's talk about DoorDash. Now, I'm not a big dasher, but I know people that are. And it seems like from secondhand experience that it could become addictive. And it's kind of like this addictive habit that people form and they can't break free from it. To the point where I know people that will order something as small as like Reese's peanut butter cups from a local convenience store to get delivered to their apartment. And they'll pay the DoorDash fees for that. I can't bring myself to do that, but how do you guys feel about DoorDash?
Mark?
I'm not paying $12 for Reese's peanut butter cups or whatever that comes out to. But I am a fan of delivery, takeout food on there. That's how I get my Indian, my Chinese rotation in there, So I'm an avid dasher.
Okay, and Dash is your preferred platform because there's Uber Eats, there's Grubhub. Those are like the 3 big ones.
Yep. I would say Dash is the preferred platform. I get like a discount through my credit card or whatever on their delivery fees because I think that's where they get you is the delivery fees.
Yeah.
Yeah.
And the convenience fee. Right. And there's always a convenience fee.
And the markup sometimes, right? The restaurants are getting a cut taken out of them too. So often they'll, reprice to adjust for that, vig.
Yeah, I'll tell you, myself personally, I haven't gotten into a lot of the ordering because it is, as Ben said, an incredibly slippery slope. Cities are built off of DoorDash and Uber Eats, etc. I mean, if you have a friend in the city, this is how they get every single one of their meals because they're not going to be cooking in their non-existent kitchen in whatever apartment they're in. They're not going out to eat. DoorDash, 26 million people, by the way, downloaded DoorDash in 2023. I don't know the stat for 2024. I'm sure it's more. But this was born in COVID. They launched, I believe, right in 2020, and just have not stopped. I have some other fun facts that we'll pull as we go here, but I love it. I've used it a couple times.
Yeah, they might have IPO'd in 2020, but I think they've been around for a lot longer. I wonder how much they grew during COVID. I'm sure there was a lot of growth during COVID.
Yep.
So it looks like IPO'd in December of 2020.
Okay, that's what IPO in 2020. Yep.
Stock price has been all over the place, peaked and then bottomed as COVID was ending, but we've rebounded quite a bit in the last 2 years.
Yeah, if you caught that bottom, you rode the wave from about $50 to where we're at now at about 170-ish. So that was a nice ride, and it's been mainly up other than a pullback last April.
Yeah.
I'd say honestly, just based on the consistency of trends and when trends are changing direction here, this probably would have been really good on trend spread over the last year or so, because you don't see a lot of chop. Like I'm looking from like call it January of 23, we were pretty consistently moving up all the way until July, August of 23, and then pretty consistently down for a couple of months, and then pretty consistently up. So it follows direction, it follows trend. It seems pretty tight, and that's what we're looking for on trend spread. And it looks like now we might be pulling back just a bit. This is the weekly chart, so the past couple of weeks have been in a decline. So I would assume our watch list probably has DoorDash at a bearish trend at the moment.
Well, right now, I have it pulled up.
Okay, cool.
It is bullish.
Okay.
Now, it's bullish, moderate risk. The EV, this is kind of where like some red flags come up, right? Like that's not a very good expected value. Pop is right around 75%. We have a 3% buffer. Or 3% ROI. So it's paying $23 in premium, which, for a moderate risk, play on our watch list. Ben, would you agree that that's pretty low premium for moderate risk? It's a $7.
Yeah.
Go ahead.
I was going to say the EV right away is a turn off for me.
Yeah.
If I'm seeing that negative of an EV, I'm not going to bother touching that.
Right. So it's a $7.50 spread right now. The put credit spread would be 160. Our sold put would be 165. Let's look at the chart again, Ben. So 165 would be our sold put. We're at 169 right now. Pre-market, it's down pretty significantly as well, maybe. So yeah, for me, as Ben mentioned, like I'm not touching this. Mark, you were actually talking backstage about a couple of interesting things you in doing prep for talking about DoorDash here. What are your thoughts on all this?
Yeah, I mean, you're kind of getting into the liquidity question here, right? And like the granularity of strikes and how many different, options there are to put on an options trade. And with 250 strikes out here, like all of a sudden that 30-10 delta spread becomes 750 wide. Like that's, like you say, $750 risk. Premium's relatively low. Like our IV is relatively low. I was actually surprised because, this is one of those names that comes out. It's got weekly options. It's a popular kind of consumer name. I thought it was going to be a more significant, piece of the overall volume pie, but it's actually number like 275 in the daily volume numbers. So we're only trading something like 15,000 contracts a day in DoorDash, which compares to, several million in SPY. But, your top names like your Apples and Microsoft are turning over upper hundreds of thousands of names. So,
right.
We do have those weekly listings, which are super helpful for putting on a trade, whether it's trend, wheel, or whatever. But volumes are lower here. And actually, I've got a share up if you want to pull it up. I've got the ADV history here. So as you can see, I just put this together in Excel right before. But from IPO to current day, we had a pretty big spike early on. A lot of that like COVID mania. A lot of these spikes are on earnings, quarterly earnings. That's where you're kind of seeing that. But this long-term trend since mid or late 2021 has just been, fizzling down. So that's a sign of a maturing company, right? Like there isn't speculative volume fueling a lot of this. But, we've seen kind of relatively consistent, if not significant volumes over the last, call it, year.
Yeah, this is pretty interesting to look at. And I was also trying to compare to what competitors they have in the space, if they're publicly traded. And I didn't too deep of a dive, but I guess Uber Eats would fall under that category. I don't believe, correct me if I'm wrong, guys, I don't believe Grubhub is a publicly or maybe their ownership is publicly traded. I'm not completely sure, but
not sure.
What's that?
I'm not sure.
Yeah, I'll check it out. But I mean, trend spread would be I was actually looking in my accounts to see if I've traded DoorDash in the past between my Tradier account and a few other brokers. Not in the last year. I have not. I have not personally touched this, but it's always on the trend spread watch list. It is always there, and I think that EV it has right now is shockingly bad. I'm
Yeah.
curious to know, and I'm going to pull it up on Tradier to see what the technicals are. Ben, maybe you have that up if you already have it, but I'm curious to know, like right now on the week, it's pretty bullish. On the month, less analysis being done, but still pretty bullish. So, yeah, I mean, outside of this pullback, I don't know. This might be something I keep an eye on here.
I pulled up the spread that it's probably trading or looking off, and I bet you if you go it's a wide market, right? So the 30 delta call is roughly the 165, and then you're going to buy the 157 half. These are 28 cents and 70 cents wide.
Yeah.
So to collect that that offer or the bid, so to speak, would be like 30 cents or 27 cents or whatever you had there. But this is a very fat market. So that's another thing to kind of be skeptical about, and maybe what that negative EV is also pointing to is that sometimes these markets are just too wide to execute on.
Good point. Yep.
Analysts are coming in with a pretty strong buy. The 1 year forecast here, it looks like they're really only expecting another maybe 11% drawdown with a lot more room on the upside. So one to keep an eye on for sure. Mark, as you said, you thought after looking kind of at the price and initially that this would have more volume. 275, you said, was the magic number for them right now as far as most traded stock. What do we think, guys? I mean, what else can we cover on DoorDash here? I mean, I will be keeping an eye on it. I want to see that EV improve and a little bit more premium to come into play. But yeah, right now it's probably a pass.
With those volume spikes that we saw, those tend to be around earnings. Like this could be the type of name, if you're an earnings trader, that could be interesting. I suspect that we're going to see a lot tighter markets, a lot more activity around those. So, if this is a name that interests you, I would say that it's probably worth paying attention to around its earnings release if you like trading that style, because that is when we see the activity come to these. And that's also fairly common, right? SPY's trading every day of the week. Whereas, as you start to get down below name 200, even the top Mag 7s are cyclical based on earnings, but that trend is even more pronounced as you get down the liquidity spectrum. So the name does interest you. If you do want to play it, I would look at those quarterly releases.
Excellent. Very cool.
The last comment that I'll have on this is I did do a quick Google search. Food on DoorDash is on average 20% more expensive than if you were to just go to the restaurant and get it yourself. So you're paying a 20% upcharge on the food costs. You're paying for delivery. You're paying for the DoorDash fees. So at the end of the day, you're paying I'd say probably 30% over what you normally would pay, not including tip.
Right.
So one thing I found out, yes, it's expensive. It's brutal. People still don't care, obviously. It's still working. One thing when I was doing research, unlike Uber Eats and Grubhub and a few of the other competitors, they actually hire their own drivers. So they've employed over 2 million drivers over the last few years. And, anytime I go into the city, I feel like half of them are on their bikes between, in Midtown. But as far as market share, they have, I believe it's 56% market share in the, food delivery space. So they do have a majority there, and 60% market share on the online food ordering space. So right now they're the king in the space. I'm sure, as we know, there will be more and more competition here. This trend isn't going anywhere. People, we've knocked down the fourth wall. People, it's way too convenient. Ben, we were hanging out the other night. People did it. Fuddruckers. Yeah. I missed out. I actually was upset that I didn't order Fuddruckers from DoorDash when they were ordering it the other night. I was upset.
Yeah, you did. You did miss out. You did. Those shakes looked pretty good.
Yeah, mint chocolate. Anyway.
The next king of the space will be whoever figures out drone food delivery.
Oh yeah. And I hate to say it, I feel like it's going to be Amazon. Amazon's coming into this space hard, I think, soon.
Yeah.
So
The door is wide open for drone food delivery.
well, here in the Northeast, specifically in New Jersey, drone is a buzzword right now that people get very concerned. Not that we'll get into that on this show, but right now, if they started delivering food via drones, I think they need to give that a little room to breathe.
That would be scary. Yeah.
But anyway, anything else here, fellas?
No, I'm good to move on. I think if anybody's got any questions or comments, feel free to throw them in the chat about DoorDash. But other than that, let's move on to learning something. How about that?
Let's learn a little.
Cool. All right, Mark, I will pass the mic off to you to talk us through implied volatility.
Implied volatility. I mean, I feel like I say this about each of the things we bring up about how fundamental and important delta is or whatnot, but IV really is like, there's one thing you got to know about options trading. It's implied volatility, because that is the probably number one most significant driver of an options price. And really, because like when you think about what an option is, it's the price of future movement expectations. And the best way to calculate those movement expectations is some kind of standard deviation or measure of volatility or measure of kind of movement. So, calculating the implied volatility, and actually to be very specific, implied volatility is actually reflective of the market's expectation of that price. So I'm a little bit backwards there when I say that the implied volatility is what goes into the options calculation. Volatility is what goes into the options calculation. Implied volatility is what we back out from the market prices. So we hold all the other values fixed and we say stock price is this, here's the strike, here's the timed expiration, here's what our dividend stream looks like. Now tell me what this 440 mark is implying in the volatility space. Higher IV means market expects big price swings. Higher volatility in general means the market is pricing a lot of movement. The lower IV obviously means lower expectations. And so this volatility premium is what, whether you're backing it out or whether you're punching it in, that is going to be the number one driver of, is that option worth $5 or is that option worth $2? So there are a lot of different ways you can kind of think about the implied volatility in a name, or calculating whether that implied volatility is fair. You might want to compare that to historical volatility. That's probably a pretty good indicator. What has this stock done in the past versus what it will do in the future? So often when you're looking at comparing different names, we might say, hey, what does the market implied volatility look like here versus what's it done historically? That might give us an indicator of whether options are cheap or expensive. Of course, the market is forward looking and the payout of that option will be dependent on what the future, realized path of that stock is. But generally kind of historicals are a good driver of, how we should price that IV.
Mm-hmm. And PeakBot uses implied volatility specifically in our watch lists. And we use implied volatility to help us determine what the overall, we'll call it, risk could be, right? And it's important to note on our watch list, and it's mentioned in a few places, but maybe not the most obvious, but when we do indicate, low risk, moderate risk, high risk, very high risk on the watch list, it's all relative to all of the other tickers on that list. So we'll take the highest volatility of a ticker on our watch list, and we'll take the lowest, and then we'll create separate tranches based on different averages and stuff like that. And that's how we kind of break out what we're calling risk in our watch
risk
list.
Level. Yeah. Low, moderate, or high, or even very high. Mark, let me ask you a question with IV here. Ever since we've met and we're talking shop, we're talking stocks, it seems like, is it the first thing you look at when talking about a stock or a certain option play or trade? When you're going down your laundry list of a pre-trade checklist, if you will, where is IV? Like, how soon are you taking IV into consideration here?
Yeah, I would definitely say it's one of the first things that I look at. And specifically, I tend to go with like the 30-day implied volatility figure.
Okay.
I think that's sort of whether you're running a long-term strategy or whether you're running a short-term strategy, that 30-day benchmark tends to be pretty good. In a lot of ways, the VIX index, it's not exactly an implied volatility number, but that 30-day benchmark volatility index, I think that's just a good time frame. You get 22 trading days. That's a reasonable kind of sample size. So looking at that 30-day IV number is probably one of the first things I look at. Stock price, IV, everything else is secondary.
We got Doug. I use IV deciles because to me, it's important to know if the IV is relatively high or low for the given underlying. And Doug was late, and it's okay, Doug. We forgive you.
Way to call him out.
He called himself out.
I think that's a great point there, right? Is that implied volatility is very contextual. That implied volatility in, MSTR is going to always be fundamentally different than what it is in SPY. Indices have different volatility structures compared to individual names, compared to, meme stock type names. And I think volatility tends to be very correlated to liquidity. So the higher liquidity an option is, the more volume it sees, the tighter the spreads are, the much more you can kind of lean on that volatility number, and lean on that volatility number as being a good predictor of future volatility. So in general, the more actively traded something it is, the better price it's going to be. And so that implied vol is going to generally tend to come, much closer to true realized vol. If you're trading something further out the spectrum, that's where there's opportunities. That's where there's mispricings. But those mispricings can also come back to bite you on the other side.
Mm-hmm. And if you're wondering where you can see this, I got my Tradier account pulled up, and there's a column for IV. I think it's defaulted to be there anyway. But we could just take a quick look at the difference. Like if we're looking at the money strike price, IV is right at 0.252, and this is for DoorDash that we just took a look at. Now, if we get over to something like a meme stock, like GameStop, we can see that the at the money IV is 0.88, right? So very different in terms of decimals, and it, again, that's a higher EV. So on our watch list, it would technically find itself in a higher risk bucket. Although it doesn't necessarily mean that the company itself is risky. It's just that there's a higher implied volatility compared to the other stocks on the watch list. But all good stuff. I think, like you mentioned, Mark, IV is definitely really important to look at. Comparison to the 30-day IV is really good. Mark, do you have a preferred place to find the 30-day IV number?
I calculate them myself. So I don't know if that was a setup for a plug for my software. Yeah, so I have some calculations there. Most brokers will give you a good indication too of what that IV is. That's probably the most commonly quoted number. If you see a vol number, it's going to be the 30-day. But yeah, and I think it's important, regardless of what number you use, it's important to kind of calibrate that based on what type of strategy you're using. So, as much as I like IV to get an overall perspective, as my strategies get shorter term, kind of the short-term manifestation of that implied volatility is the straddle. So as you get shorter and shorter in your kind of like time horizon, I like using the straddle as a nice complement. So IV is a theoretical standard deviation distribution number, whereas the straddle is a dollars and cents price. So, when using that indicator, it's important to kind of know what that means and what the term of that is.
Yep. Doug with another comment here. IV different for each expiration too. Let me ask you guys a question. If you're a new trader getting into options, right? And Ben, you just showed those two examples at the money IV. One was around 250, 280. The other one was up at 880. What's like a neutral number here, right? Depends upon your risk tolerance and what you're looking for and everything there. But like, what's a home base here, Mark? Is there a number where you're like, okay, that's about what I would expect, or that's right in the middle? What comes to mind there?
I think a good benchmark would be the S&P 500 in a similar way that we think about strategies and like returns relative to the S&P 500. Think about, high and low volatilities relative to that. So first of all, indices will always be lower volatilities than their components. In the same way that there's a diversifying aspect of, owning stocks that are going up and down at different rates, the volatility will also neutralize itself to some degree. And so that's probably a 2 or 301 level topic, but we can talk about dispersion, which is the relative difference of the volatilities compared to the average. But in general, I think it's just important to know indices are going to tend to be lower volatilities because they are a group or a basket of stocks. So the long-term implied volatility or the long-term realized volatility of the S&P 500, depending on your time frame, is probably somewhere between 12 and 15. So if you start to see, single-digit volatilities, no, that's pretty low. Once you start getting up into 25s, 35s, that's starting to be a fairly volatile stock. And another good sort of shorthand trick of kind of contextualizing that implied volatility number would be the formula to calculate the average daily move based on the implied volatility number. So volatility, because it's sort of it's a curve, it's a distribution, how long the distribution has or that process has time to manifest itself will also be a function of that. So, if you're going out 365, the range of price is going to be a lot bigger than in a narrow range. So that implied vol number is an annual figure. When we say the implied vol of the S&P 500 or the realized vol, that's 12 to 15% annualized. So to convert that down to a daily number of how much we expect it to move, volatility is a function of the square root of time in the options pricing formula. So we take the implied volatility number and divide it by the square root of the number of trading days that there are. So 252, square root of that is about 16. It's like 15.89. But shorthand, if you take the implied volatility number and divide it by 16, that's going to give you a good rough measure of daily expected moves in the market. So implied vol of SPY is at 16. We expect 1% daily moves in the market on average. Most of the time, it'll actually be lower than that because it has to account for the bigger kurtosis type moves. But if you're going from an implied volatility regime of 16 to an implied volatility regime of 32, your average daily moves are doubling now. So we start seeing VIX over 30, implied vol of the S&P 500 over 30. That's expecting 2% a day moves for the next 30 days, which if you've lived through 2% a day moves, that's a lot. And that the market gets very exhausted very quickly doing that. So that's kind of one of the other aspects of implied volatility is that it tends to be mean reverting because as we see these big spikes, we know that maintaining 2 and 3% a day moves, the market just can't sustain that. And so over the long term, that's why people say it tends to be mean reverting.
I didn't know that shorthand calculation that you just said for average daily move. That's really interesting, and I think we need to have a conversation a little bit later today, Mark, about how we could work that into our Iron Condor strategy.
For sure, it's super useful to say, okay, what does this implied vol number mean to us today?
Yeah.
All right. Just threw Ben's whole week off. Now he's going to be doing math and updating strategies, which is great.
That's why we talk about this on Monday, so we have the whole week to dig into it.
I know.
Yeah, that's right.
By the way, just a quick mention. I know we have a few other things to talk about, but if you're interested, the reason we're here on this show, of course, PeakBot is partnered with Mark and Harvested Financial, and Mark is the man, and he's the registered investment advisor that we work with. If you're interested in all of PeakBot's automated option selling strategies, but you're not interested in doing it yourself and picking stocks and selecting strategies or anything like that, all you need to do is get started with Mark and Harvested. Go to peakbot.com/harvested. We're going to do another little plug at the end, but I know we got a lot of people here watching right now. So I just wanted to make sure people know why we're here, why we do these shows, why we work together. We introduce automation into Mark's world of professionally managed portfolios. And, the sky is the limit. We're up and running. We have clients trading and have been for weeks. So I just wanted to make sure I got that out there. If you're interested in a professionally managed portfolio, go to peakbot.com/harvested. Sorry. Thank you.
All right.
No, that's great. I do also want to highlight Doug's point here about that the common misunderstanding is that the historical volatility isn't the past implied volatility. Historical volatility is the move of the underlying in the past. IV is the expected future move. So it's not the historical implied volatility. It's historical, and then a synonym for this that makes it very clear is realized vol. That historical vol and realized vol are the same terms. And that's calculated by looking at the log return of daily moves. So how much that stock moved in the past. It has nothing to do with options. Options are the implied volatility of what that, or the price of that option has an implied volatility. And then the interplay between those, you may have heard me use this term before, is the volatility risk premium, or VRP. So the kind of difference between what volatilities are implying and what they've realized in the past is the net between those two. And that's one of the option sellers' kind of fundamental tenets, is that in general there tends to be positive VRP or risk premium in options. From whether you use the insurance model for this or the VRP model to think about that, that difference in relationship between historicals and implied is VRP.
Doug always has nice comments here to keep the conversation going. I gotta say, Doug, we really do appreciate you, but we're not forgetting that you were late this morning, so it's okay. Really, really good information. I said going into this, let's learn a little. We learned a lot. Ben, even when Ben comes out of this saying, "Hey, dude, I didn't know about this shorthand math here." Of course, that means I didn't know about it. But very good information. Thank you so much, Mark, for running that on IV. Let's talk about the economic calendar going into next week.
Let's do it. So we've got not too much coming up this week. It is notable that the market will be closed on Wednesday this week for New Year's Day. And also notable to mention that next week, and we'll talk about this next week as well, but it's happening on the 9th, I believe. Unfortunately, President Jimmy Carter passed away, and there's going to be a national day of mourning. And I think President Biden mentioned last night that day of mourning will be on January 9th. So the market will be shut down that day. So we will be having another short week next week. Just note that as as you're setting up positions that might be expiring at the end of next week. Now, we'll talk about it again on our Friday show at 11:55 a.m. Eastern, just as a reminder. But yes, next week there will be another short week. There will be a national day of mourning on January 9th. Other than that, yes.
100 years old.
100 years old. Yeah. Great life.
Yeah, he did it. Saw a lot. Did a lot.
Yeah. Saw a lot. Did a lot.
All right.
And it's funny that Ford died right around this time in 2006. I believe he also passed on like December 30th or something like that.
Weird. Yeah.
Truthfully, I didn't know I didn't know markets would be closing for something like that. I like it. I think, less.
I remember Ford specifically because I was an intern at the time, and how else was I going to earn my beer money if they closed the markets on that day?
Yeah, you're like, hey, look, I'll mourn him outside of 9 to 5. Anyway, I'm getting too close to the sun here. All right. What else do we have going on?
Yeah, I'm just going to scroll through real quick. Nothing really sticking out to me on this calendar. Again, markets close on January 1st. Yeah, really nothing. I mean, all systems go for all of our bots that do consider different economic events. There's not going to be any shut off except for, I believe, on the cash flow AI bot. If anybody here is on that, I think we are shutting that down on Friday. Give me 1 second. I will quickly just pull up a private screen that you guys can't see.
While you're doing that.
Yeah, we'll be shutting down on Friday the 3rd because there's a bunch of S&P data getting released on Monday, which is when that Iron Condor would expire. So that's the only shutdown for this week. If you're trading Max's 0 DTE strategy, we are all systems go today, tomorrow, Thursday, and Friday.
Awesome. Okay, so we want to also cover just model portfolio for the week, kind of how we're splitting things between bots, how we feel about the market. Do we want to do a quick SPY analysis or no?
I know we up. We can talk about it quick. I mean, we can't seem to catch a break on our condors.
No,
I know for a subset of PeakBot traders, they were flying high on condors for a while, and it was a good run up. But these past few weeks have showed how quickly that could come crashing down. And we'll be upfront about it, and we tell everybody, listen, our strategies are going to lose, and we're in a drawdown period for our iron condor strategy. I'm personally in a drawdown period, and it sucks. But I am hopeful, and it is causing us to look deeper into our strategy and make proper adjustments. But when you've got the market moving like it's moving overnight, like that's just tough to contend with. I mean, we're down probably over 1% at least right now. Closed at 595 on Friday. Pre-market, we're at 587. So I'm assuming the put side of our condor that opened on Friday just got blown out. A good lesson to be learned, though, in terms of sizing, not financial advice, of course, but me personally, I'm scaling back on the number of condors I'm going to be running as a certain percentage of my portfolio.
Totally.
And I know that some PeakBot traders were YOLOing their entire account on our condors.
And doubling it in a month and now coming back all the way back down to reality. I mean, like this, that's what happens. If you're gonna, because our condor, these are $1 spreads. Okay. There's a couple exceptions to that, but I mean, there's so much you can do in a day, so much upside and downside. November, I think it was like October, November, iron condors were screaming. I mean, you can kind of see the chart. Obviously, there was that big pull down in November and bounce back, but December for me has been brutal on the condors. Yeah. So hoping for a fresh start. Ben, I know we're down pre-market. Mark, if you have any thoughts on this heading into this week, again, a short week, what are the technicals or Mark, you have any thoughts on this?
It's a tough week. I mean, both this week and last week, end of year is always interesting. And I think we talked about this in the previous episode. There's a lot of rebalancing. There's a lot of marginal flows. They're going to move it one way or the other. But you also have this compounded problem where the desks are staffed pretty thinly. Decision makers, they're often Aspen, right? That like there's relatively little liquidity out there. And so we tend to see much bigger moves than normal. Or I should say we also have had Christmas seasons where there have been no moves. So it's a really tough time to trade in general because it can either be really lucrative or it can be really slippery. And it really depends on sort of the marginal flows at any given time. So I totally agree with your sizing points on the condors. And, that goes for any investment strategy overall. So with the VIX at 17, seeing multiple 1 plus 150 basis point moves in a week, that's, that volatility is not what the market is pricing. So be careful out there with some of the liquidity.
Yeah, be careful for sure. Yeah. For me, I've been sitting here over the last month and, with the pretty big drawdown, not the way I wanted to end my year. And I'll run my numbers, here very soon to see how I did overall in 24. But I couldn't help but think back to my 2023 performance. And again, anybody who knows anything knows that I'm not the overly technical, very active trader here. I am more so of the set it and forget it. And Ben, I was sitting here thinking, boy, if I only wheeled Walmart all year. I made 32% last year on the wheel. Okay, not just Walmart, different stocks. Ben, we know Carvana had a lot to do with it. We should do Carvana as stocks in real life soon. Bring that back. But, I'm sitting here thinking about my return last year, 32%, beat the market by whatever, 8, 9 points. Versus this year, certainly not going to be returning 32 for my account personally. Trying all of our, we introduce trend spread, we introduce iron condor, we go for rides on these strategies, and we end up being the guinea pigs a lot. I'm not kidding. 2025, my approach, here it is. My approach is wheel heavy on very high quality stocks. I am going to be very careful with my condor. While still wanting to be active. I don't want to be inactive with my condor, knowing that we're always going to be making updates to these strategies. I'm confident that our condor is going to be a great strategy over time. And then my trend spread approach is going to be stocks that I'd love to wheel that I can't afford to wheel. I'm going to be so boring on trend spread with the take profits that are built in. 2025, I'm going back down to low risk. I'm sick of trying to be a trader. I'm going back to being an investor.
Yeah, these are high risk strategies at the outset, right? Like, let's remember that these are relatively short term trading strategies. So, even within that spectrum, low risk is still an overall high risk position.
Yeah. And there's ways to be, I always say boring, right? There's ways to be boring about it, and there's ways to roll the dice. I'm going to lean more toward the lower premiums, higher quality type plays, because I'm taking years off my life with this. It is man and machine here, right? Yes, you have strategies, but you got to pick the stocks unless you want to go work with Mark and let it be handled for you. Again, PeakBot.com. Maybe we show the screen here and we get out of here, because I know we got a couple things, market's opening here soon. So again, PeakBot.com/harvested. Check it out. Get signed up. There's a wait list. Okay. We're doing this for accounts as low. Mark Harvester is doing this for his accounts as low as $10,000. That's a huge gap that's being filled there. If you have an account with $10,000 or more, it can be fully automated, completely hands-off for you by Mark. Okay, so check that out. There's FAQs on the site. There's pricing, all of the good stuff there. So if you have questions, contact Mark. There's a contact page on the site. So what else, guys?
I think that's it. We've got the market opening up in 12 minutes here. Let's wrap her up.
All right. I confessed all of my sins for 2024. I overdid it. I got excited with trend spread. I kept condors on through a couple FOMC meetings, and I bit the bullet on it. I'm going to be a lot more careful in 2025. Best of luck to everybody else out there. If we don't talk to you, Happy New Year's. Is it New Year? Happy New Year? Happy New Year's? What do you guys say? Singular, plural?
I think singular. It's only 1 year.
Happy New Year. Happy New Year's. Wow. Do I sound stupid? Anyway, thank you so much for tuning in. We will be live again as a group on Friday with Thomas for the automation station. We'll be going over our PeakBot picks. We'll be making picks live and a ton of other good stuff. And we also go live daily at the end of the day. Most days, it's been weird with the holidays, but just to do a recap of our trades. So maybe we're doing that today? Question mark? Tune in and find out around 3:40 p.m. Thank you so much. As always, we will see you at the peak. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.